Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Anup Maheshwari. He's the Chief Investment Officer, IIFL Asset Management, to discuss the impact and geopolitical developments on India investment markets. Anup, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. Thanks for having me.
Introduce us to IIFL Asset Management and explain what the company does.
Sure. So IIFL Asset Management is an India-focused boutique alternates asset management company. We have about $7 billion of assets under management. And our business includes four broad blocks of business: private equity, structured credit, real estate, and public equities. Our client base is largely high net worth individuals, family offices, and institutions. And within our public equities book, we actually manage capital also for four institutions today, which include a sovereign wealth fund, a pension plan, and a couple of university endowment funds. So while we're India focused, we have offices or representative offices across the world as well, in the US, in Canada, in Southeast Asia, and the Middle East. So that's a quick summary of what we do.
And it's been a volatile year for the markets in 2022. What's your market outlook going forward?
Well, as far as India is concerned, India is in a very nice spot at the moment as it stands. India has been anyway one of the better performing emerging markets over the course of the last 30 years. It's outperformed virtually every other emerging market. And what's been unique to India is, while a lot of people understand the sort of the macro story of India and GDP growth, but the fact is that India is one of the interesting markets where the macro is actually translated into actual shareholder value returns. So we've seen a lot of value capture in bottom-up investing in India. It's continued to be a fairly strong alpha market, unlike many other places in the world. So, from that point of view, I think the outlook for India is still fairly good as the economy continues to grow, and we continue to have some very interesting companies to invest in. Even in the current context, where there's a lot of uncertainty, internationally, from a geopolitics point of view, from an economic point of view, I think India is sort of, benefiting in some way from it, in the sense that we're seeing India emerging now as a manufacturing base, as an alternate to some other manufacturing bases in the region. And India is becoming more and more competitive for exports, just given the cost pressures that a lot of economies are facing at the moment. So overall, I'd say, from a growth standpoint of view, India is now the fifth largest economy, and at its current rate of growth will probably be the third largest in another 10 years or so. And more importantly, the stock market is also capturing a lot of that value creation in terms of shareholder returns.
Let's talk about those investment opportunities a bit more. How did you find the impact of the pandemic and geopolitical developments? How did that impact India investment markets specifically?
Sure. So, India actually, net, if you just look back, while there was a fair amount of, social impact in the initial few months, but I've got to say, net, India's emerged very strongly out of it. India's goodwill as a country providing vaccines also helped a lot. And we've seen actually businesses emerge a lot stronger, oddly enough, post-COVID. We've seen a very strong reversion in earnings. Earnings have moved up quite substantially. The financial services sector in India, which went through a massive stress test during COVID, came out really, with flying colors, as it were. And, at the moment, as I said, India is also benefiting from a lot of the geopolitical challenges across the world. India is becoming a preferred destination for investing, both in manufacturing as well as markets in general. So I think, COVID, while it's obviously been very painful for a lot of people, but, from a economic standpoint, India has actually emerged quite strong from this whole experience.
How do you differentiate the investment strategy of your fund with similar diversified equity Indian funds? What are the unique selling points?
Yeah, so, we've got a fairly strong and disciplined investment philosophy. We call it SCDV. S stands for secular businesses. So we prefer businesses that have rising return on capital employed and profitability, and that constitutes the core of our portfolio. V stands for value traps, which we tend to avoid, which are businesses that struggle to deliver return on capital and earnings growth for fairly long periods of time. D stands for defensive businesses, which have high return on capital but low growth. And C stands for cyclical businesses, which generally are lower return on capital but can go through high growth phases when the economy picks up. And what we do is, within our portfolio construction, we try and stay overweight on the secular businesses, underweight on value traps, and we're fairly tactical across cyclicals and defensives, partly linked to the business cycles that we're in. So it's a fairly unique philosophy that has enabled us to be very consistent through cycles. We have a very long track record of alpha. And across 3 and 5 year periods, we've pretty much been top decile in our performance, not just in our public equities business, but even across our larger book. So I think it's a nice investment process, essentially, that has helped us. We also have a particular focus on financial services as a sector. We have a very strong expertise both in public and private markets in that particular area. And that's one of the biggest sectors or most important sectors to get right from an investing in India standpoint. It's the largest sector in the index. And this is a sector where you can go really right or really wrong. So it's very, very important to have the right capability here. And we think that's also a big competitive edge for us.
And Anup, I understand you've worked with Nasdaq's investment business unit since last year. What is the collaboration about, and how do you find its value to the success of IIFL?
Sure. So we associated last year with eVestment, and we had already heard from a lot of institutions that that's a great database to be part of, and that a lot of them referred to it for manager selection rather than reaching out to individual managers. It is also a great database for them to compare even their existing managers with potentially new managers. So we signed up for that, for the Omni services, which actually gives us an even broader exposure in terms of databases, not just on eVestment, but a broader set. And I think that's giving us very good visibility with underlying clients, because our focus is largely on family offices and institutions, and therefore it's a very logical place for us to provide our information. So it's been very useful so far, and hopefully we'll see even more results in the future.
And finally, what is IIFL's business strategy for international markets?
So we are an India-focused fund house, but as I mentioned earlier, we do have offices across the world. And essentially, these representative offices are focused on creating relationships in family offices, institutions, guiding them on what's happening in India, and hopefully being able to manage their capital at some point in time. I think the way we position ourselves essentially is as a gateway to India for any international investor who's looking at India across asset classes, because we offer a very wide breadth of both private and public assets, or across both fixed income and equities. And in a sense, we're a one-stop shop for a potential investor looking into India.
Okay, Anup, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.